Remaining on the agenda is our two more discussion panels, beginning with the market indexation, the best business model to generate revenues. And we would like to invite the moderator on stage, Michelle Carlson, Managing Director and Non-Executive Board Member at NASDAQ, Middle East and North Africa. Can we also ask that the panelists join us on stage? Sharif Salem, the Chief Investment Officer at Chimera Capital, as well as Shobhit Thipar, Director and Head of Index and Analytics at CEEMA at FTSE Russell. And last but not least, Fahad Chaudhry, the Client Coverage Director at S&P Dow Jones Indices. Have a great discussion.
Good afternoon, everyone. Thank you for the heroes who are still here. Thank you for joining us, dear colleagues. I would like to start by thanking also the organizer of the AFCM for taking care of us and bringing us together. I have seen that the room has been full before, so it's fine, it's the last day. But also I would like, the light is very strong. I don't see if Haytham and our colleagues, the management team from Muscat Securities Exchange are here. I would like to thank them very much for hosting us, taking care of us in this beautiful venue and in this fantastic, beautiful city. All right, so in times with increased uncertainty, in times where we have seen that the capital markets, the equities, the derivatives markets, even the oil prices going up and down, you might start to consider discussing or looking into different kind of investment, maybe more an investment that is less volatile and can bring in better revenue to you in these times. Our discussion today is, as was mentioned just now, about market indexation and how what is the best model to bring in revenue. But the topic is actually much wider than that. And I have asked my colleagues joining me here on the panel to kindly consider this discussion as educational, sharing knowledge, sharing their expertise from what they see in the market, how it's built, how it works, and what the trends are. Okay, first, a brief introduction of the panelists that are joining me today. Sharif, I'll start with you, with my beautiful handwritten notes. Sharif Salem is the Chief Investment Officer at Chimera Capital. Sharif oversees the Chimera ETF business, and he has successfully managed to develop 10 ETFs, both Sharia compliant and conventional. It's a very interesting journey, and we will hear a little bit more about it later. These ETFs are currently listed in the UAE, but Sharif brings in the market, the investors, both to the regional and the international, the global market. My second guest here, Shobhit Thipar. Shobhit is the director heading the index and analytics business at FTSE Russell. Shobhit has in his under his umbrella responsibility for Central and East Europe, as well as the Middle East and Africa. So it's quite a large marketplace to cover. Shobhit works with asset owners and investors, with central banks and the sell side investors to develop the index market. And last but not least, Fahad Chaudhry. is a director of client coverage for S&P Dow Jones indices. Fahad oversees the MENA and Turkey region, and we were just discussing that it's even growing to further areas of the world. He works closely with clients to develop the passive investment market in the region. Fahad has also an extensive knowledge and expertise in developing commodity and fixed income markets. Welcome to you guys. Let's have a discussion, interactive discussion where we not take any question as a single person question. It's about education. It's about adding your knowledge, your expertise to the topic. So please feel free to jump in. It's not strict. We will also, of course, invite for Q&As at the end if we have time, but the panel is always available for any question you might have for later on as well. All right. So from an education point of view, I would like to start by asking you, Shubhit, about, can you please tell us what's the difference between passive and active investment? How does it work, and what do we need to know about it?
Yeah, sure. First of all, thanks everyone, everyone who's still here after the lunch on day 2. So index business and investments that clients do in the market, broadly, they can be categorized in 2 categories, active and passive investments. Active investments, we can think about it as you have a benchmark and the ultimate goal, ultimate aim is to beat or outperform the benchmark by deploying strategies, your market expertise in your portfolios. Hence the name active, because you're actively working to outperform the benchmark with your portfolio. There can be multiple type of active strategies, and my friend here, Fahad, can elaborate on that. Passive investments or passive strategies, as the name suggests, you are not active, you are a bit passive in terms of trying to mimic or mimic the performance and risk profiles of the benchmark, where you have a benchmark in place and with your portfolio, you are trying to replicate the benchmark, hence the name passive. Now, as active within passive world, there can be multiple type of investment strategies and mandate types as well. I can talk about it. I'll let Fahad speak a bit about active and passive as well, because in index world, he can add more color, and then we can talk more about active and passive sub-strategies.
Yeah, thank you. And thank you for having us. Shubhit and I could probably take the entire panel to discuss active versus passive, because as index providers, it's an ongoing discussion. In terms of passive, as he mentioned, you mimic the index, you copy the intellectual property of the index, the stocks that are in there, the shares, you follow it, you replicate it. When there's a rebalance, changes happen. You're literally mimicking it. What we see as an index provider in developed markets, passive is a very strong trend. Where we see in this region, it's mainly actively managed. There's no right or wrong answers. It all depends on your fund strategy. Asset managers like to beat the benchmark. So we do have, because of passive, what happens when you mimic our intellectual property, you will declare the AUMs that are tracking that index on a regular basis. And what that allows us to do is we share with the market what the flows are, because that's a very common question that we get. What are the flows in this market? What are the flows in that market? So with passive strategies, we're able to track that. However, without active strategies, you're not able to get the correct AUMs that are in that marketplace. We do have strong approximations, but they're not entirely accurate. So if we go back to passive, as of end of April, we have $9.55 trillion in AUMs following S&P indices on a global level. We do have something what we call SPIVA, which means S&P indices versus active. We have those data points for the last 20 years in the US markets, but 3 years ago, we launched SPIVA for this region because we know how popular active is. And just as FYI, we have a booth out there, the scorecards, the reports are there. Please, after you're done, help yourself. The information is there. But we've seen 18% of fund managers underperform against the standard S&P Pan-Arab Index. We've seen 30% of fund managers underperform against GCC indices. We like to be pro-passive, but we don't preach it. Again, as we said, we have to be agnostic. We have to say your fund might be beneficial in an active strategy, but it might be better in a passive. Now, recently, in the last few years, we've seen the passive flows starting to pick up in this region. The last 3 years, the trend has shown that a lot of managers are going from an active strategy to a passive strategy. And that actually brings me to Sharif and Kamara, because their success story really shows in this region that it can be done. And they have a proven track record and they're doing fantastic. And us as index providers, we fully support what they're trying to accomplish, because it's not easy in this region to do, but it is possible to do. And their results and their growth speaks for itself.
Yeah, thank you, Fahad. Thank you, Shubhit. Very interesting. That brings us, as you said, to Sharif and the fantastic journey they have done at Chimera, launching 10 ETFs, both Sharia compliant and conventional. So Sharif, if you are so kind to educate us, what are ETFs and how do they work in our region and others?
Yep, thank you. First of all, I'd like to thank AFCM for hosting this event and for inviting me to be part of this distinguished panel, as well as hosting it in this beautiful city of Muscat. So the indexing and the passive and as Shobit and Fahd alluded to, the shift to passive investing has been happening over the past few years. And the most simple and cost-effective way of doing it is through an ETF. Now, what is an ETF? An ETF is an exchange-traded fund. And as the name suggests, it's a fund. The fund is made up of a portfolio of securities, which is predetermined based on what the fund, in this case, is tracking, and exchange-traded. So it's listed on an exchange, on a stock exchange, and investors can easily buy it just as they do with any security or any stock that they do currently. So the ETF indexing or the ETF index, you have one of the biggest and most successful and widely known, the SPDR, which tracks the S&P 500. It's one of the largest, over, I believe, $350 billion. It actually, just a few months ago, celebrated its 30-year anniversary. So as you can see, even globally, this is still a very young market, and even more so here in the Middle East. When we first started in 2019, the size of the ETF industry or the ETF market was approximately 6-7 trillion. Today, we are over $10 trillion globally. Compare that to the Middle East here. In 2019, there were 14 ETFs, 6 listed on regional markets, and 8 listed on foreign exchanges that track local markets. Today in 2023, we have 26 ETFs listed, 18 of which are now listed on on the local exchanges. And which brings me to, what you said in terms of our strategy of bringing ETFs, which are very simple, cost-effective, diversified, easily tradable investment tools for all types of investors. And that's what we're bringing to the market. We started in 2020. We launched our first ETF with 2 share classes. It was the first to have 2 share classes. We followed that up with another in 21, and in 22 we launched 6 more ETFs. So we have a total of 10, giving investors, local investors in the UAE, exposure to 5 different countries and 7 different markets. And really the beauty of the ETF is that, as I said, it can be used in multiple ways. It can be used by multiple investors for multiple reasons. They're very easily bought and sold. You can diversify across ETFs, and it allows you to minimize your risk. Instead of, I'll use maybe a local example. Instead of taking a bet or investing in Bank Muscat and Oman Tel, and and the market goes up, but these drag, by buying a Muscat ETF that tracks the index, the 30 largest liquid and highest market cap stocks in the index, it allows you to get the return of the whole index and minimize the risk of losing on your 1 or 2 bets in the market.
Thank you, Sharif. You sold it to me, at least. I'm going to invest in my first ETF now. So Shubhit, you work closely with asset owners, asset managers, central banks, etc. Do you see any specific investment trends today that are different from before? And are they looking for more profiled investment like ESGs, Sharia compliant? Is there a trend that is more specific than what you have seen before?
Yeah, definitely. So I think I'll answer this question in 2 ways. Number one, the trend compared to asset managers versus asset owners. A lot of asset managers tend to invest in active funds. So coming back to your first point, difference between active and passive, and a lot of asset owners like pension funds, sovereign wealth funds, they tend to invest their money in passive funds. That's an overgeneralization, but if I speak predominantly, that's true. There can be exceptions to this example I just gave, but predominantly that's the investment trends that we see. The type of investments that these institutions, owners and managers make these days, SI, sustainable investment, ESG, climate investment. I can elaborate on them, what they are, but these are primarily the trends that we see very pronounced in the market. One of the reasons which we think why these trends are more pronounced is the COP events in this region. So COP27 was in Egypt last year. COP28 is scheduled to be in UAE this year. So the regional investors are, one, becoming more aware, second, becoming more interested in these investment strategies. So I myself see involved in a lot more sustainable investment, ESG discussions, climate discussions. Are there funds or investments being launched in those areas? Perhaps not as many as the discussions I'm having with the clients, but more and more clients are becoming aware and looking to launch or deploy their investments into these strategies.
Interesting. Before I go to you, Fahad, with another question, I would like to follow on this topic. How do you guys create an ESG index portfolio or Sharia compliant ETF? What are, you don't need to go through every criteria, but in general, how do you pick the underlying?
So ESG means different things to different people. I think I'll start by saying that there's no global regulatory authority or body that says if you do X, Y, and Z, now your fund can be categorized or called ESG. Unfortunately or fortunately, there's no regulatory authority like that. So ESG can mean different things to different people, which means the parameters of ESG are quite broad. So as index providers, FTSE, whether it's S&P or any other index provider, we work very closely, or we tend to work very closely with our clients who want to invest in those strategies, trying to understand what they are planning to achieve. When they say, I want to invest in ESG strategy, ESG stands for environmental, social, and governance. For some clients, some regions, some countries, one pillar or the other is more important than the other. So we try to understand the end goal of the clients, what they're trying to achieve, and then perhaps create an index that mimic their investment strategy or guidelines. So that's one thing we do predominantly with clients. And to answer your question, that's the trend these days
Yeah.
we see in that area.
So just on back of to Shobit's comments, which is very similar to what we see, is and you were mentioning like how we build these things. So as an index provider, we will work with the exchanges where we have divisions that will go out there, work with the exchanges with all the listed stocks that are in the exchange. We will do CSA work with them. We will gather data. We'll get questionnaires out to the marketplace. We gather that intel. Then, we do have something called a score, right? Which our governance committees will come up with, that these are the scores and everything. Then we can take that and put it into an index, and that predominantly becomes an ESG index. So you will have the listed entities, you'll have its weight, but you'll have a score. We've seen that grow. And as you mentioned, with the asset owners, this has become a demand, a priority, a requirement, where in the asset management side, you might not see that as their first line of interest, because there's always that debate between the returns and not so forth like that. But with the asset owners, they're becoming more focused on these are the mandates that should be, which then leads to the asset managers to follow up, because they will launch the funds because there is a demand. So we are seeing a lot more in terms of the ESG space growing here in the last couple of years.
Interesting. So that's, I always thought that ESG and Sharia compliant are related to each other. There is a correlation there, but Sharia compliant must be much more clear forward, what is in, what isn't out, what is out.
Yeah, I mean, in from our perspective, from the issuer's perspective, I'll because we work with both. So we have an ETF that tracks the FTSE ADX 15, which is a conventional, so that we're using an off-the-shelf index, which is currently in existence. For some of our Sharia ETFs, we have a US, Turkey, Saudi, Kuwait. What we do is that we, once we identify the country that we want to build an ETF on, we then have been in touch with S&P, looking at the indices that they provide and off-the-shelf indices that they already have. And then because of the ETF nature, because of the nature of the ETF, and the fact that one of the key things about an ETF is that the underlying or the constituents of the ETF have to be liquid. And so what we do is we work with S&P to customize the index in order to make it investable for an ETF. And in the Sharia case, they have a Sharia board that filters the stocks and has a Sharia board that approves the stocks that are to be listed or to be included in the index. And then we have an additional layer where the Sharia, we have a Sharia advisory team that overlooks that and sort of gives the okay and issues the fatwa to make or to help investors realize that this is a Sharia compliant ETF.
Interesting.
Sorry, so just to go back on Shree's point on the Sharia side is we will take a standard conventional index, and we have a set of Sharia parameters in our methodology that's available to the public. We will run a screen on that index every month to ensure that it's Sharia compliant. If it's not Sharia compliant, then the fund manager or the asset managers, they will know that this is in breach. It could be out of the index, and then maybe in a year's time or 6 months' time, whatever it is, it could be back into the index. So we do a monthly screening in all our Sharia indices to ensure that it meets that criteria in our methodology.
Thank you. So I'll stay with you, Fahd. A different kind of question. As an index provider, how do you collaborate with exchanges across the globe to widen and deepen the local market? How important is this for participants in these markets? Do you get what I mean?
Yeah, that's a good question. So we cover all asset classes, whether it's equity, fixed income, commodity. We have something called strategy, where we have factors, thematics, artificial intelligence, anything basically that we can source a price on, we can calculate. So every exchange globally has a different appetite. I don't think there's one that wants to be, everyone has the same kind of values or ideas. They are very much in general batch, but everyone has their unique strategies. So we partner with about 17 exchanges on a global level, and each has a different, unique relationship. So in this region, we can do a few things. We can take the index and become the calculation agent of the index. So for instance, because we're in Oman, we'll talk about the Muscat exchange. We would be able to do the calculation for them on their specifics, on their requirements. They would keep the brand, S&P would be the calculation agent. Why? We have the infrastructure, we have the technology, we have the resources, we have the manpower, and we have the experience. There's other instances where we would do a co-brand. So it would be an S&P, let's just say we work with Australia, it would be S&P ASX index, where we would have our governance and our committees on board with the ASX, where we would define what the methodology and so forth looks like. Now, there's no one size fits all. Everyone has a different idea of what they want to do, how they want to do it. So we work with every exchange uniquely and to see whether we can do a partnership, a calculation, or we could even just create an index, because customization is something that we see very popular in this region. And what I mean by that is they want an index that the main agenda is they want liquidity, that index. So you might want to take the top 20, 30 stocks of that index and remove the other 70. You might want to say, oh, you know what, the stock weights might be too big, so we want to cap them. We can do that. You might want to have certain limits and exposures to certain sectors because markets have been volatile. We could do that. So there's not one set strategy, but we have that discussion with the exchanges, what their appetite is, what they're looking for. And it's been really good the last couple of days because I've had quite a few discussions with some of the exchanges and what their interests are. And everyone has something different. Someone is looking at something more Sharia focused. Someone is looking at sustainability. So it ranges, but we have that capability to offer on all spectrums.
Fantastic, thank you. And it's a little bit related, Shobhit, but my question to you is, looking at our stock exchanges in the region, what is required from them, from any stock exchange here, to be included in a larger index provider basket, whether it's FTSE Russell, or S&P Dow Jones, NASDAQ, MSCI, anyone? What is the process? And it would be interesting also to hear the benefits, if it's worth the work. So can you please elaborate a little bit on that?
Yeah, sure. That's a very good question. And I think that brings us back to the fundamental question of what's the benefit? Why would you like, as a security, as in, why would you like to be part of any index? So to answer that question, I think the biggest benefit of a security to be part of the index is the global reach. So as index providers, whether it's FTSE, S&P, MSCI, or any other index provider, we have clients, both institutional, high net worth, and retail clients, not only regional, but global, who invest in capital markets using our indices as the benchmarks. So if you are investing in a market using one of any index provider's index, and some securities are part of that index, so you would invest in those securities. That statement is very true for passive funds, where as a part of the mandate, you are mandated to track or mimic the index, replicate the index very closely. So if there are certain countries, certain securities that are part of the index, you would have those securities as part of your portfolio as well. So the benefit to the companies, to the exchanges, to the regions are quite fold. Actually, there are quite a few. One is you are increasing the reach of the securities listed on your exchanges, not only to regional investors, but also to global investors who are now hold your securities, regional securities in their portfolios. The second benefit is the liquidity. So the more and more players trade securities that are part of any index provider's index, the more it means they'll buy, sell those securities. So the more liquidity they generate in the market, which is something that's very sought after by any exchange. Any security should be liquid. The third benefit, I would say, is the global outreach. So if there's an investor who's not a country-focused investor, but a certain regional investor, like there's index provider A who invests in developed markets, index provider B who invests in emerging market, so on and so forth. So if the securities that are country-specific securities part of indices, by default, even if they don't have a country-specific mandate focus, they still get to invest in those securities, which again increases liquidity and other things I mentioned.
And it's to be able to issue ETFs on the indices. So the indices, when you have indices that are representative, that are managed and maintained by one of the big index providers, it allows for the issuing of multiple types of ETFs, and which we have done, as I alluded to before, when FTSE launched their ADX index series. One of them was launched, in fact, I think, with the intention that an ETF would be created, and we did create an ETF on that. And yeah, and as we've done also with S&P, taken off the shelf indices that are already there, just sort of customize them and tweak them a little bit in order to make them investable for an ETF here in the region.
So if you want to be included, this is the guys to talk to, but don't forget NASDAQ, yeah? Okay, thank you, guys. I think we are starting to run out of the original time, and I would like to ask the organizers, Dr. Fadi, Joe, I can't see anyone, if we can take a couple of more questions. Is that fine? Yes, yes, that was fine. Thank you so much. So, Sharif, we know that ETFs are largest in the US, followed by Europe, but that's a huge gap, I think. Asia is coming after, the Middle East is starting. Do you see an increased appetite in our region? And is there any specific basket that attracts more than others?
Look, we definitely, as you mentioned, at $10 trillion, over $10 trillion, the size of the ETF industry, I think about 70% of that is the US, and possibly maybe 20% Europe, the balance in Asia. Out of the 10 trillion, we have 1.4 billion, which pales in comparison, of course. But it has been growing. So when we first launched our first ETF in July 2020, total that was collected at the time was about $550,000. The most recent that we collected, or most recent launch that we did in November of 2022, the size of that fund was approximately $150–170 million. So there has been, when we first started, the average monthly in 2020, average monthly daily trading value was $16–17 million. Today we've reached $180 million. So there has been an improvement. There has been increased knowledge. But you know, in real estate, they say the three most important things are location, location, location. With ETFs, it's education, education, education. Because really that's what's missing, and that's what we've spent a lot of time on, not just building the ETFs and marketing them, but also the education part. A lot of investors are still not comfortable with the structure or with the idea itself. The fact that you can have a fund, they know what a mutual fund is, and they're used to a mutual fund. You go invest, put your money, and you can perhaps take it out on a monthly basis. You might have to lock it in for a year, but to put your investment in a fund that you can basically trade any day of the week, and you know, there's no lockup period. So there's still a bit of education to be done. But as I said, and as I've illustrated with the numbers, there has been an improvement. It took many years. The SPDR that I mentioned, the 350 billion, when it first started in the 90s, they were on the verge of closing it down because there was a lack of interest, a lack of trading. For I believe it was about 2–3 years before it started picking up. So it takes a while. It will take a while, but definitely over the past 3–4 years we have seen an improvement, and hopefully that can continue.
And just to comment on Sharif's point, just very quickly, is, you know, being in this region and in this industry for the last 12 years plus, first several years, none of this was even discussed, you know, but change is inevitable. And it's great to see that it's finally picking up. You know, Michelle, I think we've been dealing with this conference for over a decade now, and we weren't talking about sustainability and ESG before. You know, those topics were just, they come and they go. Now the entire conference has focused on that. And it's the same thing with the ETF space, right? Is that strategy, it's been there, but it was non-existent. It wasn't discussed and everything like that. But you slowly start seeing those results come. And the numbers that Sharif shared, you know, they're phenomenal for this region because it's on the right direction and the pace is picked up quite significantly. And I see personally that this path will continue.
And if I may add as well, right? So we see a lot of investments, and Fahad, I think, has already mentioned it, move from active to passive strategies. So I'll give you one more example, which is really fascinating in my opinion. So let me start by saying the line between active and passive is getting blurred as well. Allow me to elaborate why. Historically, a fund manager will launch a portfolio on a standard index, which Sharif called as off-the-shelf index, where the index is already available. You launch a portfolio or fund and trying to outperform the benchmark. So hence the name active. Lately, what has started to happen is because of that shift from active to passive, clients are now requesting custom indices, whether they are thematic indices, if they think there's a certain alpha in the market that they can capture. So certain strategy, tech stocks, electronic AI stocks, or any other strategy that they think they can capitalize on, they come to an index provider like us. They tell us that this is the type of strategy that I'm after. Can you help me create a custom index that mimics or follows this strategy? And then rather than trying to outperform that index, I'll mimic that index. So all of a sudden, their strategy is still incorporated, that the strategy using which they were trying to generate alpha in the active management is still pretty much in place. But rather than portfolio trying to outperform the index, you create an index which mimics your alpha strategy and then try to replicate that index. So the lines lately, especially in the last 3-4 years, between active and passive strategies are getting blurred as well, which has resulted in an increased influx or introduction of ETFs as well, for the reasons that if you invest in a thematic fund or active portfolio which outperforms the market, there can be lockup period. As an end investor, you might end up paying higher fee. But if the same strategy is incorporated, embedded in a passive fund, which is ETF, you can trade almost daily. You'll end up in paying less management fee and get access to the same exposure, same strategy as well.
Thank you very much. Insightful. Just for sake of respectfully for the time, do we have any questions? I have a couple of more questions, of course, but do we have any questions from the floor that we can take before we? No? It's difficult to see with the light, but normally silence means yes, but in this case, it's no. Okay, so one sensitive question from me. If any, and this is for all of you, if any, what are the regional challenges for investment in ETFs? Do we see something specific that is makes the investment in ETFs or indices more complex than the equities or derivatives?
Sharif, I'll let you answer that and I can chime in.
Yeah, so I think there's multiple. So one of the key things is the lack of regulatory cohesion between the different markets. You know, we worked for quite a while, over a year, with the UAE exchanges and the regulator in putting coming to the ETF regulations and the operating cycle, because it's a bit different in terms of versus regular stocks. But just in the interest of time, so I'll just touch on these things. And then the lack of or the absence of dedicated allocation from the local sovereign wealth funds, the endowments, all these public pension, in having allocation to local markets. And also the absence of the authorized financial advisors. You know, in abroad, you have financial advisors that advise either individuals or corporations about allocation in terms of savings plans and all that. And that is still lacking here in the region. And it may be in some countries and not others, but as a region, that's probably three of the things that are lacking.
Thank you. So this is interesting for the audience to hear and maybe support in helping out with. So I think we will finish here if there are no questions. Thank you, gentlemen, for the very interesting discussion. We have heard about passive and active investment. We have learned about how to be included in one of the global indices. We have heard about education. And I asked Sharif about the trends. And I think after this session, the trend will go up because the education has been hopefully a little bit more reaching out to you guys. Thank you, everyone. Thank you for hosting us.